What a week it's been. Actually, ever since the coronavirus pandemic took over, it's been quite a few incredible weeks for the stock market. They fell terribly in March, rendering everyone's portfolio in the reds, and they've rebounded to a certain extent in April and May. Let me start with a quick question. When you invested in the stock market, what did you think was guaranteed? Was it profits? I don't think so. Was it losses? Not really. What was guaranteed was that you had married this incredible loving spouse called volatility. Volatility is the tendency of your investments to go in either direction, sometimes without rhyme or reason, and that can be really frustrating and unnerving, especially if you're on wrong side. But then again, volatility can be frustrating, but it can be really profitable for several investors. For example, traders can utilize volatility to execute trades and take advantage of the stock price movements, and investors like you and I can take advantage of this volatility to add up to our positions, buy even more stocks, and consolidate our holdings. On that account, I have certain tips for you on how to manage your portfolio. Number one, the worst thing you can do right now is sell your investments. If you are thinking of selling your stocks just because they are down 60%, it's the worst thing you can do right now. Research your company, and if it's solid and if the story still remains strong, it would be really prudent to invest even more in the company at these prices. Number two, an even worse strategy right now would be to sell the stocks in the greens, if there are any, and to keep the ones in the reds. Peter Lynch calls this pulling out the flowers and watering the weeds strategy. It's terrible for your portfolio in the long run. Number three, just don't look at your portfolio if you can manage that. It's natural if you see a lot of reds in your portfolio, you'll get emotional. Press the sell button at exactly the wrong time. Number four, this is an incredible time to analyze your risk capacity. Of course, when the markets were rising, you thought you could go 100% equity because who wants to miss out on all those gains? But now that the stocks are correcting 40% or more, are you comfortable having on an all equity portfolio, which is by any measure really risky? Are you considering gold? Are you considering fixed deposits or mutual funds? Think about your risk capacity as an individual in the long term, and you'll be making very sound decisions. Number five, educate yourself. Get onto investopedia.com. See if there's terminologies that you do not understand. Read interesting books on investing, such as those by Peter Lynch and Benjamin Graham, if you are interested in value investing. Number six, you have to seek advice if you are stuck somewhere. But there's a caveat. Seek advice from those who know what they're talking about, perhaps like yours truly. Because if you seek advice from the wrong people, they might just tell you that investing in the stock market is an entire gamble, and you don't want that negativity to be flourishing within you, especially at these times. Let me know if these tips helped you. They've really helped me in the past. And if there's any stocks that you might have chosen and are in the reds and you want me to give my 2 cents on it, let me know in my DMs. You share this post on your story, and I'll get back to you with my 2 cents backed by research, analysis, and perhaps you and I will be in a better position to analyze companies than we are today. Have a good investment journey. It's pretty incredible weeks coming ahead. Stay safe and stay healthy and keep investing.